Hi, I'm Charlie Jamieson, Chief Investment Officer at Jamieson Coote Bonds, and this is a review of markets in March 2021. Over the course of March, we had much more stability in fixed income markets after a tumultuous month in February. We made a very long video last month and we won't subject you to that again, but we do have some important things we wanted to discuss that have occurred over the course of the month. President Biden has pushed forward again with another stimulus program, this time targeting infrastructure. Although critically this time he wants to finance this by tax hikes. We think this is tremendously important. Obviously, the stimulus is encouraging. It will continue to foster a high growth environment in the United States. But the funding via tax hikes is interesting, and we do believe that that can interplay with risk assets in time. It would repeal a lot of the Trump tax cuts, which clearly risk assets really enjoyed back in the day. So that's certainly something to watch. As we head into the second quarter, we've got to rise up this inflation hill moment. And this is mainly to do with the base effect of inflation as it's calculated in a year-on-year manner. Remembering, of course, this time last year, we had the lockdown starting in China that moved on to Italy, that really went global. And throughout that period, we ended up having negative oil prices in oil delivery futures contracts. No one could store physical oil as the world stopped, and oil prices went negative, which was tremendously deflationary at the time. In the year-on-year calculations, that very deflationary data is about to fall out, and the base effect will allow for new data to be loaded into that calculation, which will make inflation lift tremendously. And so we would expect that to peak in and around the May or June period in the United States. And you're going to hear a lot about this inflation narrative in the next few months, but it's really important to recognize what is actually occurring here. We've actually written a huge white paper on this. We're very happy to provide you with a copy. It's tremendously long, but we've surmised each section to make things easier. But there's a lot in play here. There's actually a reflation, which is the take back of a deflationary period primarily, rather than a sustainable inflation. And we really need to understand the transient factors versus the persistent factors that may occur. In every inflation forecast we can see, even from the very optimistic inflationists, they have this hill or this rise in inflation followed by a steep decline, and we absolutely believe that as well. We've also looked at the secular disinflationary forces that had been so prevalent in markets before this period to see if they'll still hold thereafter, because we think this has tremendous asset allocation impact right through the system, be that in our risk-free complex, which we manage, through the credit complex, credit being that financial lubricant that makes the whole economic machine work, all the way out to risk markets, and it's tremendously important. I think with that, also the autonomy of the bond sell-off is something which will be very interesting, given that bond sell-offs tend to happen on expectation. As we've seen already, we don't have any realized inflation at this stage, but there is expectation that it will come, and it will come via this base effect, and it will peak in the middle of the year, roughly, depending on geography, about the middle of the year for the United States, a little bit thereafter for Australia, and then further into the Q3, Q4 period for Europe. But we want to take you through that journey because we think it can open a window that's really interesting for investors. I guess last month we talked at length about the way that volatility in our complex often doesn't last and it can skip into other asset markets very easily. The passing of Biden's $1.9 trillion stimulus program has probably masked over some of that volatility jump for now, but it's not going to last forever. Those cash transfers are occurring. We know that we've had very, very powerful growth in the US and the economy is actually going pretty well. To be stimulating to that degree is a little dangerous because what comes thereafter can be more of a concern. And the markets will look forward to this and have expectations about this. So we think it's interesting, can the bond market move ahead of these realizations and potentially peak as the realizations occur, if not before? That's entirely possible. So we want to take you on that journey and give you a big summation to those kind of outcomes. Over the course of March, most of our products have done pretty well. They've had a good bounce back out of February's performance, but we do expect that it's going to continue to be volatile into these higher inflation prints, which central bankers are reminding us are tremendously transitory and we should look through, but we've got to see how the market's really going to react to that. Looking ahead as we look out across the fixed income universe, we also have a period of very high seasonality coming into the middle of the year. And we'll be interested to see how the domestic economy evolves as JobKeeper is now wound down at the end of the month, combined with more COVID hotspots. Brisbane is going through some issue at the moment as we film this. We don't expect to be able to get through winter in unscathed manner. If we can have lockdowns here in Melbourne in February, in the absolute height of summer, what does that look like into winter? I think it's still going to be a little bit more stop, start, stop as we get through the year. But the other flip side of that is the Northern Hemisphere is clearly going to open up. The COVID wave is coming under control. There are still variants which are causing some concern, but vaccinations continue in a very robust manner, and we do expect that the Northern Hemisphere economies will open up and start to garner some of that high growth that we've been expecting as people are released from lockdown, particularly in the European and UK economies. So lots to think about, lots to look forward to. We look forward to going on that journey with you. Our inflation white paper, Over the Inflation Hill, will be out just after Easter, and we look forward to chatting to you about it. Thank you very much.